One morning in Tokyo, a single trader pressed the wrong key, one typo, one misplaced order, and in seconds, billions of dollars vanished. The entire Japanese stock market trembled. Computers went wild. Traders panicked. It wasn't a hacker or a terrorist, just a man who made a typo. This is the story of the biggest keyboard mistake in financial history. December 8th, 2005. Tokyo's trading floor buzzed as usual. Japan's economy was booming again. Tech stocks were flying. And on the 36th floor of Mizuho Securities, a young trader was preparing a routine order. He was supposed to sell one share of a small company called JCOM for 610,000 yen. Simple, safe, routine. Until he typed the order, 610,000 shares for 1 yen each. The system didn't stop him. No warning, no confirmation. The trade went live. Billions of yen in sell orders hit the market instantly. Traders on the floor stared at their screens in disbelief. How is this possible? JCOM's stock price collapsed. Other traders rushed in, buying everything they could. In less than a minute, chaos consumed the Tokyo Stock Exchange. The glitch spread like wildfire. Other systems began to lag. Algorithmic traders kicked in automatically, selling, buying, shorting, trying to make sense of the madness. The market turned into a digital storm. Billions of yen changed hands, and the company behind the error, Mizuho Securities, was bleeding money every second the trade stayed active. They tried to cancel it. They couldn't. The system wouldn't allow it. When Mizuho finally realized what had happened, the damage was irreversible. The order had already executed. They lost 40 billion yen, around $350 million USD, in minutes. But the ripple effect was far worse. Investors lost confidence. Traders started pulling out. The entire Tokyo Stock Exchange had to shut down for nearly a day, the first time in its modern history. Mizuho blamed the Tokyo Stock Exchange. The exchange blamed Mizuho's software. Executives pointed fingers. Lawsuits piled up. In the middle of it all, one trader sat in silence, knowing he was the man who had pressed the key. The press called it the Fat Finger Trade, a name that would haunt him and the entire Japanese market forever. Mizuho's reputation collapsed overnight. The CEO resigned. Billions were wiped from the market. Tokyo's image as a model of precision and efficiency was shattered. Other banks rushed to implement confirmation locks, a button that simply asks, "Are you sure?" A feature that could have saved hundreds of millions. The Fat Finger Trade wasn't just human error. It was proof that even the most advanced financial systems are built on fragile code and fragile humans. One line of text, one click, one slip, and the world's third largest economy blinked. The Tokyo Stock Exchange recovered. The systems were upgraded. The headlines faded. But the lesson never did. Technology amplifies everything, including mistakes. And sometimes the smallest human error can shake an entire nation.